Oh, I got some old out of the freezer. Let me take this out for you. Yeah.
That kind of be right there.
I know I want to be so solid. It's trying to be right. Look, it ain't frozen yet. If I open it up, it's gonna freeze now.
But he ends up in the capacity for 3. Be interested to see if he stays with that scheme or if when Brown is running the handoffs like that, if they just decide.
Hey, everybody, good evening. We're going to get started. How's everybody? Hope everybody's having a good evening. Let me push my hair back so y'all can see me, get the hair out my face so y'all can see me. Good evening, everybody. My name is Greg. If I haven't met you before, welcome to the Friday night Smart Money Fundamentals. Tonight, we're going to talk about the price imbalance, how to recognize it, why it's important to recognize it, and what actions you can take after you recognize it. And again, hello, Carl, Bobby, Andrea, Brandon, Michelle, Kisa, Claudette, Dawn, and my number 1 son, Kasim. I'm glad y'all could get on. So let's get started. Like I said, I'm Greg, and I've been trading now with IML at, Academy and DC Traders, DMV Trades. Been doing this with this group now for like about a year and a half. If you're just getting here, hold on tight. Don't get discouraged. Chase the knowledge, and the money will catch you. And I'll elaborate more on that in a minute. But that's very, very, as I've learned that, as I've grasped that, things have gotten a lot better. And I am becoming a consistent and profitable trader. But it is a process, and allow yourself time to do so. So like I said, let's get started. I'm gonna share a screen. I always like to talk about the real side of trading is really 85 to 90% mental, and then 10% is technical. We can all learn the technical. It's a little more challenging sometimes to master ourselves. And by that, I mean, you know, those areas that we think we might be on top of, but throw money in the mix and things change up. So I'm gonna share my screen here. We talk about the market participants. I always like to start here. If you've been on any of the sessions with me before, you know I always like to talk about the shark in the water. And I use this was shared with me. I just thought it was a tremendous depiction of who the players are in the market and how they're represented in the market here as the sharks and the pilot fish. And basically the shark is represented by the main participants in the market, the big hedge funds, the large institutions, major banks, those organizations that pump millions, trillions into the market every day. Remember, this is a $6.6 trillion a day market. Could you guys please, I'll try to police it, but if you guys could police yourself and just make sure as you log in, if you would be so kind to mute your phone, that'd be great. And don't mind hearing from you if you got something to say, but just kind of dead in the background noise. But if you do have a question, please unmute yourself and stop me. I'll be more than happy to address it. So yeah, this is a $6.6 trillion a day market. So where you have to, again, be mindful of this. Where does that money come from? Who, what, is how is $6.6 trillion getting pumped into a financial market? The foreign exchange market funds the stock exchange market. It is a lot of money going on, and people don't get into this to lose money. Certainly not, millions of dollars. So let's just put things in perspective. And what I'm about to say is not to minimize, but again, just to help put things in perspective. So when we open up a $200 account, $500 account, $1,000, $10,000 account, in relation to $6.6 trillion, it's nothing, okay? It is nothing. And so our transactions do not impact the market, all right? But we have to be careful to understand that because they don't impact the market, that means, we can kind of expand on that a bit and understand that, this isn't really set up for us because we don't have millions of dollars. It's sure we can participate, but the game isn't set up for us. The game is set up for those sharks. They're shark, okay? And what do sharks do? Sharks are killing machines. Sharks are money. Let's look at it like money-taking machines. And between the broker and those large institutions that are pumping millions and trillions of dollars into the market every day, we got to make sure that we stay in position. We understand where we are, but in relation to those large hedge funds and big institutions and our brokers and such, we got to stay in position so that we can eat too. And that's the second part of the picture. That's the fish that are swimming along with the shark. Those are pilot fish. They don't get in front of the shark. They just do what the shark does. They learn the movements, follow the movements of the sharks. So at the end of the day, or when the shark reaches its goal, which is to eat, they eat too. And that's what we have to do. That's how we have to fix our mind to understand. And we got to trade like the banks. If we're thinking we're trading, and again, I encourage everybody to just drop the title of retail trader. Don't accept that. You can't be a retail trader. Retail traders lose their money. retail traders used to trade. Those are the folks that when you meet them and you tell them you're trading and they say, oh, I used to do that, they were retail traders, okay? Retail traders would not survive this journey because they won't have the skill set, won't have the mindset associated with banker mindset trading in order to survive these and reap the rewards of what's available when the shark eats. All right, so moving on. And like I said, this is all just, this is all just mindset stuff. This is just what, when you just gotta wake up, just wake up and roar sometimes, like, I'm gonna eat. I'm gonna do what the shark does, and I'm gonna eat. Now, this other one, I always like to talk about my. Okay, there we go. It didn't flip over. All right, I gotta stop sharing one to share the other. I was trying to, hopefully it would work with me, but it's not. So we'll do the next best thing and share that. All right, let me just talk about this real quick. See, this is the other thing. Again, 90% mental, 10% technical trading. Like I said, we can learn the skill, but are we disciplined? Are you disciplined? Am I disciplined? Sometimes I'm not as disciplined as I need to be, and I'm gonna show you an example of that later. And this is all about discipline. This is all about understanding or learning the rules of the road and staying within those rules of the road. Because the minute you jump out from behind that shark, you're gonna get eaten. The minute you think you can outswim that shark, or you see something ahead of the shark trying to eat before it eats, or something like that, that's not exercising proper discipline, and that's putting yourself in danger of being eaten by the shark. And again, you might get away with it once or twice, but trust me, it's not going to work in your favor consistently on a consistent basis. So what I have to continue to learn how to do is be disciplined. We've had opportunities to exercise discipline in a number of areas of our life already way before we got here. And most of you guys have done a real good job with that. You've been disciplined in the area of being parents, been disciplined in the area of being good employees, been disciplined in the areas of running your business or being good brothers and sisters and those kind of things. All of that requires some level of discipline, or whatever thing that you've sought to achieve in life, between your sports or just excel in your job. It requires discipline, some things that you just have to do and have to do consistently. And it doesn't even mean you have to like to do it. But if you want to eat when the banks eat, then again, it's going to require the use of some discipline. Next time, we'll talk about real quick faith. Faith means a lot of things to a lot of people, okay? For me, when I'm exercising faith as it relates to trading, and again, I'm just talking about for me, this is not a religious faith for me. This is a faith in my skill set. This is me trusting my skill set, okay? That the things that I've learned, the discipline that I've practiced and I'm practicing is going to work for me. It keeps me from flip-flopping in the market because, as you all know, and you've seen for yourself, price goes up, price goes down, price goes sideways, price goes back the other way. Price can move in a lot of different directions. Well, not a lot of different, up, down, and sideways, but you know what I mean. It can even stall sometimes. It can do things, but not move in our desired direction, and it can cause, trigger some emotions along with that. So what do? Learn to manage those emotions. And for me, that's where the faith, or better yet, I might change this from faith to courage, because that's where, for real, just the courage to trust my skill set. Okay, I've been practicing this. I've been, following my studies. I've seen it work for me before. Why not this time? Why not stay in this trade? What do I see? Why did I get in the trade? We're gonna get into that a little later. But anyway, faith or courage. And then I'm gonna stop here just for 1 second. Holy Pips, I am trading affirmation. I picked this up from the guy that does Holy Pips. He's a member of the Gold Cup team. I can't think of his name right now, but there's just one thing in here. This is like an I am affirmations kind of thing. But it's one woman. I am profitable, a six-figure trader presented. Oh yeah. Number seven. I am presented with unlimited trading opportunities. And when you understand that, it can kind of help you manage that other thing we haven't talked about, and I'm not going into detail about it, but greed. When you understand that the trade that I'm in is not the last trade or the trade that I think I missed, you know, or got in, or when if you're taking trade ideas from, you know, signals groups or something like that, if I missed the entry, feeling that, you know, fear of missing out, the FOMO, no. Release yourself from that. There's unlimited trading opportunities. You can do this any time of day, all day. You know, you get what I'm saying. Okay, I didn't want to really talk about that. So anyways, last thing, patience. Again, patience. All of us, we're adults. We've had plenty of time to practice patience all the time. Every day, you know, more than we want to, we have to practice patience. And I had to go to the grocery store. Of course, the lines to the back of the store, mostly because of the, you know, people respecting each other's space and such, but still, I know I got to get on this call at 9 o'clock. The line is long. Guess what I had to do? I had to be patient, you know, or put my food back, but, you know, and not eat, but I had to be patient. And the patience paid off because I got my food, I got home, I fixed it, we're on the call. Patience pays. Same thing as with respect to trading. Patience pays. There are, like I used the example earlier, there are times when price just is not going to move as fast as we want it to. It's not going to always move in the direction that we want it to. Okay, but again, we can trust our skill set. If we can be disciplined and again exercise some patience in the market, watch what happens. Watch what happens. I'm sure an example. I want to get to an example because I like to tell on myself in this session as well. So, because it helps me, and hopefully it'll help you as well. But an instance where I was not patient, and it cost me. So, anyways, all right. So enough of that. Let me get out of that. So I'm going to stop sharing that, and I'm going to let me close these, close that, close that, close that, and I want to bring up a chart. Give me 1 second. I find it. Everything is right in front of you till you're looking for it, isn't that right? Okay, here we go. All right, so I'm gonna share that. Okay, all right, you guys should be able to see my screen now. Now the topic on the invite did talk about imbalance in the market. If you've been on the session with me before, I apologize. You know, it's going to be a bit redundant, but as you get into developing a skill set for trading, you'll see that again, it's wash, rinse, repeat, wash, rinse, repeat. I remember early on, one of the trainers, one excellent trainer, David Morris, was sharing with me, and he was talking about how trading was boring, and you know, and I'm like, no, it's not boring. But the point he was making was that again, it's the same thing over and over and over. Again, that's the discipline. That's the discipline that's necessary to do the same thing over and over. Check yourself, because it don't work out all the time same way over and over, but you know, you check yourself, you tweak, you move on, etc. But anyways, let's do this. This part of it I want to move through real quick, but it's really critical to understand how we arrive at looking for and the importance of imbalance. I'm looking at EUR/USD. That's probably EUR/USD and GBP/USD are my go-to pairs, and they work in conjunction with the US dollar. The relationships. My page is not loading. Let me just refresh here, guys. And what we always do, we always start out with going to higher time frames. And when we go to higher time frames, like the day or the monthly, day, weekly, or monthly, I'll start at the, if it'll load for me, nothing's loading for me. Give me 1 second, let me just hit the refresh. And I'll just type it in again. This is trading view for folks that, if you're, you know, I don't know how new each of you all are, but this is trading view, EUR/USD. And trading view is a trading platform. It's free. They do have, you know, you can upgrade to like the pro level, and then I guess some others above that for a particular fee. But again, it is simply a trading platform, but it's powerful in that it allows you, you know, all the tools that are available for marking up your charts, helping you navigate and understand where you are in the trade. It's valuable, like I say, just grabbing trend lines and horizontal lines and vertical lines, all those kind of little markers that help us identify where we are and where we want to be in the market. So I'm up here. Let me go down one. And again, all trading styles, most trading styles that I've seen will start with an analysis at the higher time frames. Now, why is that significant? The higher time frames really dictate where the market is going. The smaller time frames are it's like the tail of the dog, kind of like, you know what I mean? The higher time frames is the body of the dog, and the lower time frames, and that's how I relate to it. It's kind of like the tail of the dog. It's wagging, but and it's moving, but the real momentum of the market is dictated by what's going on with the head of the dog. The larger time frames represent what is really like for instance, if you want to determine the overall trend of the market, you want to come to the higher time frames in order to do so. And that's what we're looking at here, EUR USD and at the weekly. I kind of don't want to move these little markers because they're wrong. I guess I kind of have to. That's I can put that back, but I'm gonna leave these lines up here. But basically, if you are not clear with what we're looking at, again, each one of these candles represents 1 week of price action. Okay, so again, we just, without using any sort of trend lines or anything like that, we can see that the market has been doing this. Well, I'll put one in just for visual, but we see that the market had been very bearish for a period of time, starting back up here, up around April. That's April of 2018. You can see that the market has been very bearish. And then we see the market has been bullish, or has rallied from right around this area, which is looks like right around May of this year, up and through where we are today in the middle of August. That's where we are today on this last. That's the week that we're in right here, the August 24th. Okay, so and what we want to look at is basically, again, the market is going up. For EUR USD, the market, I should say, has been trending in an upward direction. And so we take that information and start, well, first of all, actually, before we leave this area, this is where we pick up and identify a couple of things. Where are imbalances in the market? And what is an imbalance? Imbalance in the market is simply an area in the market where price has not traded into yet. Keep in mind that there has to be, there has to be equal size to any transaction. It has to be a seller and a buyer. Okay, makes sense, right? Seller and a buyer. That's what makes an equal transaction. This is no different. We usually color code our candles. Okay, for every red candle, it has to be a blue candle. In other words, for every sell candle, it has to be a buy candle. And when there's not, that area that is exposed is referred to as imbalance in the market. And guess what? Let's move this. Guess what? The market has to trade into that area. So let me change up what I said a minute ago, because yes, the market has rallied from right around here in May up and through August, but we see this week, this last candle here, this week there has been some bearish movement. Actually, still almost kind of a bit of an indecision kind of candle, but still, you see where it retraced. So that's the best way to put it. Price came up to the wick here, but price closed here. So price went up here, and then price has retraced to this area here. So there looks like it might be the beginning of price retracing into this area here. And that's interesting to me because this area here, I'm gonna try to highlight it for you. This area here, all this area here, represents imbalance in the market, because what did I say just a moment ago? There has to be there's no opposite side selling here. There's only buying. There's only blue candles that are going that were part of this rally. Let me change the color. This like my colors kind of bold so they stand out. So we saw the market rally from down here, and again, especially from this area here to here, there's only blue candles, until again there was the retracement here in this last week. Okay, so what does that possibly tell us? And I can say everything is kind of possibly, because again, you know, there's no absolutes here. You just try to understand patterns in the market, and that what I'm pointing out today, imbalance. Once you can identify imbalance, there's a very, very good likelihood that again, trading with the trend of the market, there's a very strong likelihood that price is going to come back into this area and fill it in. It has to. Now, when? I don't know, but it has to fill this area, because like I said, there is an imbalance. So that gives us a bit of an edge when we're developing our trade ideas, because now this becomes a target. This area in here becomes a target. All right. So I'm gonna move away from this, because again, we're not going to develop an entire trade idea based on imbalance on the weekly, but what we'll do is step down into our lower time frames and then start drilling down and narrowing that target. Okay, so this is the 4 hour, and I'm gonna come down to the 1 hour, because that's typically where I will start developing my trade ideas. But keep in mind, this whole shaded area represents that area of imbalance that we saw on the weekly. Let me move this arrow. But we're not going to trade into this whole area, okay? But now we're on the, I got so many little markings on here. Let me get rid of that. They're relevant, and then I guess they're relevant for my like I said, I do a lot of time trading this particular, so I do a lot of markings here, some of which I want to keep because they're just, if I take them out, then I'll forget why I have them there. But anyways, so this area, this shaded area, represents that area we identified on the weekly as an area of imbalance. But when we look at price and when we drill in on price action in this area, make it a little bigger. We drill in on price action in that area, and we can see that there are some areas where price has traded evenly, okay? So, and by that I mean these areas where the red starts to show up in price action. So on the weekly, it was all blue through here, but now we see blue and red, and that's significant because we know that price has traded, at least given what we see here on the hourly, in some parts of this area, some parts of this overall area of imbalance, price has traded into it evenly. So let's do this. We're going to narrow. Let's get this a lot smaller, and we're going to look real specific, because I still see areas of imbalance. And you gotta get your eyes trained so that you can see these areas of imbalance, because price is going to come to these areas. Price is going to come to these areas. These become, like I said, these become your targets. These become your target areas. You can, I almost bank on it. I'm not going to tell you if you can bank on it, but I almost bank on it. Okay, so let's just say we got this area here as an area of interest. Let's just call it an area of interest. Price is here right now on this little dotted red line. That's where price closed out. I'm gonna grab my measurement. I just want to see the distance. So I'm about 60 pips halfway into that area of imbalance, into that area. Okay, so here's where I say why this particular pair is so, I don't want to say easy to trade because it's not easy to trade. I have too much respect for the market, even to use that kind of terminology towards the market. But I can use the DXY for confirmations. And when you're trading, that's what you want to establish for yourself, a list of confirmations. And with EUR, USD, GBP, USD in particular, AUD, USD, and the DXY, there is a pretty close correlation, opposite correlation. So if the DXY is going up, those pairs I just mentioned will be going down. So I'm gonna just flip over here to the DXY just for 1 minute. Let's see what the DXY is doing. Okay, we saw on EUR USD, we saw price. What was price doing? We saw price come down, and then this last little, whoops, and then right in here it rallied a little bit, and then it closed for the day on this looks like a doji or even a shuck. Not even. I guess that's a doji. Like that's the. Hold on, I grabbed the wrong trend line. But I'm gonna show you real quick. I'll show you something real quick. So we have price doing that, of course, and then we got this pullback here. All right, which is good, But we can see again on the hour prior to that, price was up here. So actually, we saw price come down, retrace. So this is beautiful price action. We see price come down. We see it retrace. So we're watching all of this. We see price retrace, and then we get another push to the downside, and then here where we are now, we see in price starting to retrace again. And I can almost guarantee you the opposite would have happened on the DXY. Let's go back. We saw the price going down on the EUR USD. We see price going up on the DXY and then coming down. The exact opposite of what we saw on the on EUR USD. So again, I just go into that to kind of plant in your mind again, learning whatever pairs that you're trading, finding out research to see if there are any correlating pairs that you can use to help with confirmation. And like I said, I just understand EUR, USD, and the DXY. But the bottom line is, and let me throw this in too, I don't want to get too far off of it, but when I'm trading, what I've learned from my mentors in trading is that, again, it's like, I hate to use sports analogies. I love to use sports analogies, but I'm just not sure everybody will connect with them, but I'll use it anyways. If you think about like a quarterback on a football, I'm looking to see who's unmuted, guys. If you think about a quarterback on a football field and the information that that quarterback has to take in prior to snapping the ball, is so many things moving. If you're watching on TV, it may not be as obvious, but if you understand the game, you know there's just so many pieces moving out there, and that quarterback has to take in all of that information and execute that trade and make that play, and then while making, again, millions of adjustments in their mind and feet and everywhere else in order to get a successful outcome. We have to learn to do the exact same thing in trading. So, and I said all that to say that if you understand what's been going on with the US dollar because of, or mostly because of COVID, the US dollar has been doing just what you see here. The US dollar has been on a steady decline. Okay, this was where price is now. This is a new low. Price was here last week. So price came down and took out this low and then came down into this area. So what has, again, if you're keeping up with the financial markets, the currency markets, you understand or have some inclination that, okay, well, whatever goes down has to come up. The dollar has to rally at some point. At what point is it going to rally? And we could see in this area, once price came down, I don't want that. When price came down into this area, we saw a rally. We saw price pull back. We saw price pull back, not create a new low, and then we saw price rally again. So it looks like, and again, I preface everything with just, you know, we just trying to deal in high probabilities here, but it looks like the price of the dollar might be beginning to rally. So what does that mean is that I need to, and in this last little instance, let's just put the last little trend line here, just to be totally accurate. Look at this area, we see where it pulled back. But what do we have? We have higher high, higher low, higher high, and then probably again higher low, and then it's again a strong probability that the next move price, and it may retrace a little bit more. I'm gonna show you why, because of the imbalance, but price will probably retrace some more and then take off again. And it'll probably, I'm gonna move this line, and price is going to come down here. Why? Because of imbalance. Because of this imbalance in the market down here. There's only blue candles. There hasn't been any selling against it. So what you would expect is that price is going to come down. Now it may not come all the way down, but it'll probably come at least 50%. Thus, we got fibs to give us exact measurements on stuff like that. So I just bring my fib on just so I can see from the low to the high. My target is anywhere between the 61 and 71. I don't know if you can see that. And they're just numbers. Don't get freaked out about Fibonacci or this, that, and the other. It's just numbers. It's just measurements. I can do the same exact thing with my eye, for real. But not, you know, but this is more exact. But so don't get freaked out. You first time hearing Fibonacci, get used to it. You'll learn how to use it. Learn how to use it as a tool. But basically, I would just use it in order to just mark where I think the price might come down to, somewhere in this area here before it takes off again. So what does that mean? I'm gonna take that measurement, because I'm gonna have a similar imbalance. Let's say let's call it 30 pips. I'm gonna take that information back to the EUR/USD, and to the reverse of what we just saw on the DXY. We see the same imbalance. We saw a bullish imbalance on the DXY. I see a bearish imbalance on the EUR/USD. This area in here has to be traded back into. This area in here has to be traded back into. It's no buying against here. So what do? I'm gonna take that same 28 pips or 30 pips. Let's get that out the way. I'm gonna use my measurement tool. I'm gonna say, well, price closed here. So let's say, oh shucks, I just used my fib. I just stay consistent. I just use my fib. And I'm gonna say, okay, again, the same area. I'm waiting for price to come back up into between the 61 and the 70, and this, I'm sorry, 61.8 and the 71. I was trying to make it bigger. It didn't work. But anyways, in this area here, I'm gonna move the fib so we can see it better. I basically just want price to come to me in this area. Arrow. I want price to come to me at around this, somewhere in this area, okay? And then my expectation from there is that price is going to continue to sell off. And why is it going to sell off? One, because like I said, we saw signs of a price reversal on the weekly, okay? Where the weekly, that week of August 24th candle was closing with bearish momentum. So we see the dollar is going to retrace, and then again we're continue its rally. Because again, what is it doing? Is again, we just go with what we know for right now. Everything could change Sunday night, but for right now, we know that we have higher high, higher low, higher high, and then right now a higher low. And again, we're expected it to push here and then continue its rally. So again, just taking the reverse of that over here. This looks so awful crunched up. Let's do this, guys. Sorry. There we go. All right, that's better. We're expecting some more retracement here of EUR USD, and then for price to push down where? Push down to our targets. We got that's the whole benefit of establishing the areas, or identifying, I should say, the areas of imbalance, because price has to come in and fill this balance. And we already said, let's say and that's why we wait for price. There's no way I will get into this, if all I'm thinking is going to happen, is still no way I'm going to get into a trade right here. No way. It has to come back into my zone. It has to come back into a discounted price. I want to be able to sell at the highest point that I can. I want to be able to buy at the lowest point that I can. So I want price to come back. I want price to come to me. Come to me, price. Come to me, price. I'm not going to chase it. I could miss it, and that's okay. I just wait for the next opportunity, because like we saw in that slide, it's unlimited trading opportunities here. So again, if you miss an entry, boom, you'll find another entry. And I hope you guys are following. I'm hoping I'm not being too confusing here. But basically, long story short, we're going to wait for price to come back to a desired area. Okay, we're going to wait for price to come back to a desired area somewhere between that 61, 61.8 and the 71 on our fib, which is somewhere in this area here. And then we enter a sell, and then continue, and then bring price down here. So let's just say if we got in right around here, just to give a little pippage. So now we're looking at about 85 pip 85 pip trade. Now, next question. Okay, well, Greg, if we do that, where's my stop loss? All right, let's just make this really real. Let's make this really real. And then we'll make this really real. Okay, so I want to get in. I just have to remember what I did. Okay, I want to get in here. I'm putting this blue line right here. Say I want to get in here. Okay. Now, if price pushes past there, guess what? It's going to run. it's going to run. So, and I'm just judging that by. Let me take that back. What I want ideally, I want price to come down here to the 88. All right. Yeah. I want price to come down here to the 88, somewhere between the 78 and the 88. That's going to be my ideal entry. So let me do this exact same thing on EUR USD. So again, if I'm gonna wait for price to come here at the 88. Now let's go down the time frame. 15. Go to 5. Actually, get my entries off of the 3 minute if I can. So now, try to make it bigger. I'm on the 3 minute, and I'm just here to look for an entry. So that means now that my entry, I'm using the same fib measurement. Sorry if it's might be getting a little congested with all the lines and everything, but hopefully you can follow. My 88 is right here on this green line. So I want to get in the trade right here. Let me make it bigger. And this is where you get into your sniper entries. We're going to have probably like maybe 5 pip, 3 pip stop loss, and then it's going to rock. So I want to get in right here on this candle, 50% of this candle, and I'm sorry, the 88 was on purple. Hold on. Oh no, the 88 was green. Yep. 88 is on the green, and it just I won't say coincidental, but that's the power of Fibonacci in terms of its mathematical sequences and measurements. It put me 50% of this candle, which is perfect. because that's where I would have wanted to enter anyway, 50% of that candle. So I'm trying to keep it, make it bigger so you guys can see this next little piece. Okay, so we're getting in on this candle right here. I'm gonna draw a little, getting in on this candle, half of that candle. Trying to, or you can see it, I guess. I'm making too much a bigger deal about it. But anyways, around this candle, one that I have blocked off, okay? I'm getting in on 50% of that candle. So what do I do? Where do I put my stop? I put my stop right, let's do this. My stop is right here. Let's make it red for stop. So what have I created for myself? I've created an extremely high risk, a low risk to reward trade. I'm getting in here. I got a 5 pip stop loss, and I've got a shucks. Let's go back to the hour. So we can see the. Hold up. All right, so like I said, we're getting in on 50% of that candle. So now, as opposed to what we were from the 61, we were looking at about an 85 pip. Now we're looking at 132 pip move. Now we're looking at 132 pip move. I gotta mute somebody, guys. Where you at? You got everybody just check while I'm check your phone or your devices just to make sure that you're muted, please.
Yeah, I
Thank
should be muted.
Whoever just said, yeah, I should be mute. That's you're unmuted.
Oh.
All right, maybe you got yourself. Okay, thank you. All right. Okay, yeah, thank you. I'm still hearing somebody, but anyways, thank you very much. So anyways, that's the drill. That's the drill. And that's the importance of identifying your areas of imbalance. Now, I'll be honest with you. Me, like I said, ideally, I want price to come back up here between the 78 and the 88, all right? And we went down to the 3 minute, and I found my entry. I got my 5 pip stop loss, and that's really represents the ideal entry for me. Now, I would be watching price, and here's where and let me just tell myself real quick. Here's what I was in a similar trade this week. Okay, same pair, and actually, I'm gonna show you exactly. Let's clear this. I'm gonna get all this out the way. Boom, move that. I put the trade idea. I shared it with my team. It was this right here. I'm just copying it. I'm gonna bring it over here and drop it on the screen. Okay, just look at this for a second, and we'll get out of here. Let me turn it white. Let me show you why you wait. Show you exactly why you wait, and you take your time, and let price come to you. It will reward you every time. And not every time, because sometimes you don't get what you want, and you just wait some more. But when you wait, guess what? Every time I can guarantee you 100% of the times, if you wait, you don't lose money. Well, let me put it like this. I'm gonna say if you 100% of the time, if you wait and miss a trade, you don't lose money. All right, let me set this up real quick. I'm gonna let me show you how I kind of design or make my little markers in the chart. All right, this was from a product that I have. It's called Steady, and it was a sell limit. And let me just put these lines in here. I'm gonna just use these horizontal rays. I'm gonna just drop 3 of them in there, and then I change the colors. We've been over this. I went through this in another session. It's I can do it again, but just not right now. But I use 3 colors: a blue, red, and a green. Blue it represents my entry. Green represents my take profit, and red represents my stop loss. Nothing magical about it. It's just colors that work for me. All right, so in this instance, I'm giving my take profit. I just set the coordinates in. That's 16,596. 16,596. Set that. You can't see it. It's down way down here, I guess. Let me look at it before I make sure I'm put it right. Let me make sure I put it right. 16,496. Oh, 16,596. Okay, that's right. Yeah. All right. Oh, there you go, down there. Okay. So, and then let's put my entry. My entry is 19,087. 087. And then my stop loss is 19,390. All right. Okay, so this was on 8/19 was when the trade was given. So let's go. Let's go to the hour. We can find it. All right, so we got everything. The red is the stop loss. The blue is my entry. We have, I think, about 28 pip stop, or let's call it 30 pip stop, and $246 pip take profit move. All right. So here's where waiting gets you. And like I said, this is on the 19th. So where's the 19th? I said, boom, boom, boom. Here we are. 18th, 19th, and I think, did I put the time on there? Hold on one second, because that's important, because I think it came out that evening of the 19th. And when you're looking at sell limits by any of those pending orders, they're pending. Okay, so again, they're not. You don't know when they may execute. It could be days before they execute, or they could get invalidated because other things happen. But needless to say, this one didn't get invalidated. It just had to wait for it to execute. So the 19th, let's see, that's 1, 2, 3, 4. I'm pretty certain it's somewhere in the, let me put it, hold on a second. Let's put a horizontal line there. I got to keep up. A little hard for me to keep up as I put my lines in there. All right, let's go down to the hour. Okay, so that's the 19th at 9. Came out the 19th? No, wait a minute. Hold on one second. Yeah, the 19th. Okay, it came out 19th. Okay, so that's 9. That's 9 p.m. I got you. I got to break it down a little more. All right. Well, let's do this. Let's do this. So when it came out, I had to wait for price to execute the trade. Long story short, had to wait for price to execute the trade. We can see once price was activated. I know what it was. Yeah. Let me see. What was that? Let me get rid of this. Okay, price activated, and we can see, of course, where price did it hadn't hit the final TP, but there were TPs along the way. And trust me, I've cashed out a few times on this particular trade. But the point I wanted to kind of highlight for you guys was, one, the whole point of imbalance in the market. But the other point was the importance of waiting for price to come to me. But it looks like, and I don't want to waste all time. I should have probably dug this up before we got into the session. Price did activate here. Yeah, all right, well, yeah, bad example, sorry. But price did activate, and it has moved from this initial entry, 154 of those 200 and something target. It's going to probably hit it because of those reasons we talked about before, where price is going to retrace all those squiggly little lines I had there a moment ago. Price is going to retrace and then continue its bearish move unless something happens with the US dollar. But more than likely, we'll continue to get movement in that direction. And then, as we just said, it will then turn around and come back down. So I will probably be looking at this very closely on Sunday night into Monday, see what kind of movement I get on the dollar. That's going to, be my final confirmation as to whether or not I get back in this. But again, it has imbalance. Let me move my McGinley so you can clearly see imbalance, because that was the whole point of this discussion anyway. So you can clearly see this area of imbalance that price has to trade back into. All of this area here, from those wicks all the way up here, and that's where we identified the 88 fib was up in this area. Hopefully price trades all the way back up into a discounted area, and then boom, we just get back on for the ride. Now, the reason why some people might say, well, why don't you buy it up? Might, but if I did that, again, it would have to be a very small, very tight stop loss and a very small lot size. Because again, at this point, I'm trading against the trend, and again, price doesn't have to come back. It doesn't have to retrace this deep. It doesn't. I want it to, but it doesn't have to, and I understand that. So I can wait, and I guess that maybe that's why I was coming here to talk about wait, because I can wait for price to come up here. If it doesn't, if price, like I said, now price could come up here, price could come right around 50% of this and then turn around as well. And again, if I'm waiting for it to come up here, yeah, I'll probably miss that move. But guess what? I'll just wait for another opportunity and wait for another and wait for another. But when I get in, boom, it's gonna work to my favor, as opposed to getting into something too soon and then getting into, because trust me, if you get into it too soon and then it comes back up here, you're going to be sitting in some crazy drawdown. If you get in it here thinking it's going to turn around, and then it doesn't turn around until it gets up around the 88 retracement, now you're sitting in a 78 pip, almost 80 pip drawdown. And again, depending on your account and depending on your lot size, that can be pretty devastating, if not just to your account, emotionally very devastating to see your account going to the negative for all this period of time. So anyways, and I know you'll probably people set stop losses and that kind of thing, but still nonetheless you put yourself in a precarious situation. So again, just best to wait, and I'd rather miss than get into a bad trade, or have to get in one and sitting down while it's retracing, and then I got all these regrets about why did I do it, et cetera, et cetera. Oh, shucks. All right, so I really didn't have much else. Hopefully I covered. The whole point was to talk about imbalance, why it's important. I kind of got off into some other things about the EURSD and the relation to the US dollar, such. So anyways, I'm gonna stop sharing. Does anybody have any questions, anything that I could add a little more clarity on? I can see one thing in the chat. Explain price coming to you. Oh, okay, good question from Lisa. Price coming to you. That's the whole waiting thing, Lisa. Okay, I want price to come to a certain area before I get into a trade. And again, I'll bring the fib into it just for a second. If I'm selling, I'm not going to sell until price comes. I want to sell from as high a point as I can in the market. I want to buy from a lowest point as I can in the market. So from where price is right now, as I mentioned, I wouldn't want to get into a trade on a hope that it's going to turn around and continue to go bearish. I want to wait for price to come to my desired pocket. My desired pocket is up here between the 78 and the 88 fib. Once it gets up into here, it's probably too deep of a retracement. I mean, but and it's likely that it's going to continue, you know, on a continuation move. So I want price to come to me into this area, my desired area, before I get into a trade. That's what I mean when I say I'm gonna wait for price to come to me. Great question.
I have a question.
Who
This
is
is
this?
Claudette. Claudette.
I Claudette. I Claudette.
Hi. Hi. Yeah, so I was wondering, I recently started trading less than a month ago. So
Uh-huh.
I've got in a situation where I put a trade in, an actual market execution, and then when I put the
Uh-huh.
trade in, it was going fine in the correct direction I wanted it to go, and then all of a sudden when the next candle came out, it went in the opposite direction. Okay, and I'm
Okay.
wondering, if I see that happens, is it okay to wait it out to see what happens with the next candle, or should I cut my losses and get out?
Oh, okay. Let me ask you this. I'm gonna kind of put you on the spot, Claudia. What pair was it? Do you have the information on the trade?
Yes, I do.
All right, what is it?
It is it was,
You mean the pair first?
EUR-AUD.
EUR-AUD.
Yeah.
All right, all right, 1 second. All right, so what you said, the market execution?
It was a
Where'd you get in
market
the trade at?
execution at 485.
That's the time, or what price
No,
did you get in at?
the time I got in was August 20th,
No,
it says.
what's
Okay,
the entry price?
the entry
What was
price
your entry
was
price?
the entry price was 1.65485.
Okay, and what was you had a stop loss?
No, I was just watching it. There was no stop loss.
Okay. Did you have to take profit?
Yeah, I was gonna take 10 pips.
And I'm sorry, you were selling or buying it?
I was buying. So I was going up to 585.
Uh, 65,
No,
585.
165,585, correct.
Okay. And okay, while I'm putting this up, so and then what happened?
It went down instead of up.
Okay. And what day was this?
The 20th of August.
Okay, so right in here somewhere where we are. About what time of day was it?
It was 6 p.m.
6 p.m. That's 1600, 1800, 6 p.m., right?
Yes, 1800.
Okay. So that's this candle right here. but you got in up way up there? I don't understand. Okay. All right. So I'm trying to answer your question.
So I got.
Go ahead.
No, I was just listening. Yeah, I
Yeah.
don't know
So
what happened.
yeah. Well, let me ask you this, and we might need to take this offline, but then again, it might help other people on here. Okay, so you were looking at the market and you said, I'm going to buy, and you looked at it, you decided to buy because the candle you bought on was a green candle.
Right, but you know what I think happened? I think I actually got in the day before, and it went south, and then I might have fallen asleep.
That makes more sense.
And then when I got up, I was waiting for it to turn around. So I'm wondering, okay, so I started all the way up when it was high. Okay,
yeah, I see. That makes sense.
And then I fell asleep. And then I said, well, what goes down must come back up. So I was waiting for it to come back up. But I ended up, I had to cut my losses at a certain, because it went down all the way to, what is that number? It went away to, I'm finding the beginning.
Down here. Yeah. Well,
it went all the way down to 1.64711.
Yep.
You see it?
711 down in here. 711.
Yeah. And so I had to cut my losses, which was a big loss.
Yeah.
But I was trying to ride it out. I was trying to, wait for the money come to me, and
let me say this. Okay. You've been trading a month, right?
Right.
Okay. And I'm gonna say this the same way it was said to me. If I'm on an airplane and I have my driver's license, well, I'm messing it up from the beginning. If I'm on the plane and I'm seated but not buckled in, and the door's still open, and then the stewardess, flight attendant, the announcements come on, and they welcome me on board, and the captain comes on, say, hey, welcome. I just got my driver's license. Let's have a good flight. You gonna stay in that seat, or you gonna get off the plane? I'm gonna get off the plane, because I'm not flying with you on a plane with a driver's license. I ain't say you got your your pilot license. You got your driver's license. You follow what I'm saying? So the forex market is a jet plane. If you've been trading a month, you need to be not trading alone. You need to be training with under the guidance of one of the mentors on the iMarkets Live platform, and taking your guidance and taking your trade ideas from him or her only, until such time that you understand how they see the markets, how they make decisions about the markets, because it's not just a up and down candle thing, or I see one candle going up, or I think it's a buy, this, that, and the other. That's a recipe for you to hand your account over. And that's not criticism of you. It's, again, really just intended to encourage you, and so you don't, find yourself in this situation again. Because that what you just described, I've done the same thing. I've done the exact same thing. And oh, absolutely, because I didn't know any better. You follow what I'm saying? I'm thinking that, okay, I'm thinking I'm catching up to patterns or something within a real short period of time, only to find out that I can't outsmart this. I can't outthink this. Okay, so that's why the IML Academy has 100 or more educators, all of which have multiple years of experience with this, and that's why they teach us how to do it. No offense to nobody on this call or anybody, but I'm not Most people don't learn how to do this on their own, okay? And do it well and do it consistently. Now, let me take it one step further. If anybody got to go, I get it. But Claude, hopefully you hang with me on this next thing I'm about to show you. You probably already know. But I gotta do this. I gotta do this.
Okay.
So I'm just logging into the IM Center. I'm going over here to go live. And my son is on this call, or he was on this call, and he'll tell you, he's still on this call. He'll tell you how many times he and I have a conversation, and the first thing I ask him, who are you trading with? Who are you trading with? You know what I mean? You have to find a mentor here. That's why they're here. That's what you're paying $174 for. That's why you're enrolled in this level of education. This is the Harvard of Forex and digital currency. You gotta leverage this education side. These are the Forex basic training. And in these sessions, they give their trade ideas and they show you how they build trade ideas. And the beauty is that each of them, I'll just pick Able as an example. Each of them have recorded sessions. Well, they have live sessions. Of course, that's the real sauce is in the live sessions. But if you need to review that session, you can always come back and rewatch any of the sessions. And they have favorite sessions where they talk to, most of them break down specific. Here's one right here, the best trading style, SMC. Now, I haven't watched that one, but that would really catch my eye, certainly, getting started. Complete strategy with Trade Smart. Bitcoin basics with Stags. That's interesting. Smart money entries with Zoe or whatever. Mindset. The DeLorean story. All this is just, this is whoever's listening. This is how you learn. This is how you learn. I get on Friday night hoping to kind of reinforce some of this, but I hate to say what people got to do, but you got to get into this academy and find somebody that's available when you're available, and get on the sessions with them. And don't be discouraged if you don't know what they're talking about. Because again, if you haven't been in the academy, if you haven't, you're not going to know what they're talking about, but you will if you keep going back. And then you will, and only then will you approach the market differently. You can't enter a trade off of looking at one candle and thinking that pattern is going to continue, or that like you said, Claude, I'm not trying to pick on you, but again, I've been there where you just say, because nobody was telling me different, that okay, well it'll come back. Why? It might, but again, there's technical skills that you need to apply to your logic to hold up, and so that you say, okay, well, now if you're looking at an area of imbalance, if you identify the area of imbalance in the market and you see the trade go away from you, then you have a reason, you have a technical grounds to stand on and say, well, you know what, price should come back to this area. And then you start understanding, I know I'm getting way off into the weeds here, but then you start being able to understand and correlate price and time, and you can almost have an idea what session it might come back into that area. You could be very right, but if you don't have all of those little bits of information to be able to tie together, at the London session, it reached the daily high or the daily low, so I wouldn't expect the next movement or get a continuation on that movement in the New York session, and on and on and on. So if I'm trading it around 5 o'clock in the evening, that particular pair, now I'm getting into the Sydney session and the Tokyo sessions. Volume is starting to slow down, so I wouldn't expect any movement until later in the day or possibly the next day. But all of those things, that's why I use the analogy about, a quarterback having to process all of this information before they snap the ball so that they can execute the play and get the desired result that they want. We got a lot of information you got to take in order before you start being able to look at these charts and have them being able to make any sort of decisions on them that you should be putting your money up. You should not be putting your money into any trades, Claudia, without the guidance of one of those IML educators, point blank.
Okay, thank you.
Okay, sorry for all that, but you're welcome. Okay. Hey, look, I'm gonna put my contact information up. Open it. And please feel free to, I'm not gonna say it and not mean it. Let me stop sharing that, then I can share this other thing. I'm only saying it because I do mean it. Feel free to contact me. That's a telephone number. Hopefully you can see it. That's 240-273-2645. My Instagram at Gregory Whitmire, and SavvyTrader1.com is the website. On YouTube, I'm SavvyTrader1 on YouTube. Please reach out. I'm serious. I would be humbled, to continue this relationship. If you guys have any questions, just, if I can answer, I will. If you can put up with my wordy responses, apologize for that, but that's just kind of how I'm built. So, but again, all that said, just here to help. And get that knowledge, guys. Get the knowledge. Chase the knowledge. Stop. If you're brand new, stop trading. Start training. Okay? And then once you turn the faucet on, once you unleash that knowledge, those technical skills, that patience, that discipline on this market, whew, boy, there'll be no turning back. But look, if there aren't any other questions or such, and I really appreciate you guys getting on. Like I said, I'm humbled with anybody listening to me. Okay, thanks for the answer. Do you prefer harmonics, Fibonacci, HRX, like cash trap, or which tool? That's from Lisa as well. Thank you, Lisa, again for the question. I guess the way I've learned, I guess referred to naked charts. I do use Fibonacci. I'm not familiar with HRX. I've heard price trap. I haven't heard cash trap. I'm familiar with it, but again, those aren't HRX and like the price trap. I don't use that. They're very effective. There's a whole bunch of ways to skin this cat. With respect to harmonics, I am in the process of learning harmonics. That's I've been following very closely. Manny Quinez, in my book, is one of the best educators on the platform. So I follow him real closely, and he's caught my interest with respect to harmonics. And if you aren't aware, he's putting out some sauce harmonic on. They're getting ready to just super turbocharge the harmonic scanner. So I got my eyes on that really closely. And then what is a safe low risk lot size when entering your trade? You have to, how many do you determine a lot size per trade? Those are good questions, Lisa. You need to call me, Lisa, because see, you're gonna have me on here another half hour, because that's a whole nother session in terms of low risk lot size. You have to be able to determine your amount of risk. Then you calculate your risk percentage of your account. If you have a $500 account and you are willing to risk 3% of that account, then you're telling yourself, okay, well, I don't want to lose any more than $15 for any specific trade, any one trade. I don't want to, lose any more than $15. So then you set your stop loss accordingly, and that's going to vary depending on you set your lot size accordingly, which is going to depend then on the stop loss on that particular, associated with that particular trade. So it's a little quick calculation, or you could use what I use. I went to on Manny's site. You could download a compound trading chart, and he has it broken down. And like I said, if you want to reach out later, I can show you how I use it, and he has it broken down beautifully. for, so you can determine very quickly what your lot size should be based on the stop loss that you, and that's so important to understanding risk to reward. Risk to reward is the single most important element to understanding trading, in my opinion. It's the single most important element. You have to understand risk to reward. That's how you make money. And you know, that's how when they say lose a little or risk a little and gain a lot. Oftentimes, and I use a scenario when I first started, people were doing 10 pip trades, and that's fine, nothing wrong with it, but 10 pips to 10 pips, or 10 pips with 30 pip loss. As I grew uncomfortable with that because I started understanding that that was a upside down risk to reward scenario. So anyway, so now I flip it and I'll have a 10 pip stop loss and an 80 pip take profit target. So anyways, good question. Brandon Ware, thank you, Brandon. I appreciate you taking time out to help us newcomer like myself. If you're still on, Brandon, you're quite welcome. All right, guys, I've gone way over. I appreciate you guys who hung in there with me, and we'll pick up this next week. If anybody has any things that they would like to, have me speak to as topics, feel free. Like I said, holler at me. And of course, you can get me on Telegram too. So yeah, just let me know. I'll be more than happy to speak to it. And y'all have a good one. Good night, everybody.